Hey, welcome to the In Layman Terms podcast, where we talk all real estate, real stuff, no fluff, just facts. And I have Greg Bond with me today. And so Greg Bond, he has done A to Z in real estate, one. But the phenomenal thing that really piqued my curiosity when we first met, Bitcoin miner.
Oh, yeah.
Right? Because I didn't know anything about I still think it's voodoo. So how do you go from, let's just start with that first of all. Let's just do the intro on how do you go from real estate, but then you went to commercial and then to Bitcoin mining.
Right. Well, no, I still have residential. Mm-hmm. I have a lot of commercial. I don't like it. I still have a lot of commercial.
Okay.
And then Bitcoin mining was kind of a, let's try something different. I met a guy that was a Bitcoin miner. I was speaking at the New View event. Mm-hmm. And he and his wife came, and they approached me afterwards and said, hey, loved your talk, but we'd really like to talk to you about something else. And he kind of explained what the journey he'd gone through with cryptocurrencies. And he said, would you ever invest in that? And I said, no. I said, I don't invest in things I don't understand, and I don't understand Bitcoin. I don't understand cryptocurrencies. It's not my thing, and I typically don't invest
my hand with that.
Don't invest in things that I don't understand. So he said, what would it take? I said, well, you'd have to educate me. And he said, I can do that. So we spent maybe a day or two, maybe 3 a month, and we'd get together and he'd educate me, and he got to the point saying, okay, would you invest now? I said, well, a little bit. So we did a 6-month test. The test turned out better than I anticipated, and I said, yeah, I'm all in. So
yeah, one thing I got to learn and appreciate as we've got to know each other much better is the fact that, one, you're incredibly smart, really. I mean, the way you explain things, like your calculator we had in our group setting that day, but how you talked about changing into commercial, but then you educated yourself in something that was a non-starter, and then you became good at it.
Yeah.
And I think a lot of people would not do that. Me, I'm like, okay, as long as it's real estate, I'll do it, right? Because I'm still focused on that. But you've expanded in so many different ways that's probably the future in some ways.
It was interesting. We just bought a facility in North Carolina because of the electrical price.
So wait, dive into that, because I was going to ask that question because you moved it from here to there for a reason.
Yeah. So we thought we could negotiate with FPL and get what they have what's called a scissor rate. So once you get up to over 2 megawatts of usage, they typically come in and say, okay, we'll negotiate. If you continue to use that amount or more, we'll cut our rate. And it can go as low as 50% of the rate you're currently charging. And to give you some sort of idea, a 1 cent change in a kilowatt hour price over a full megawatt is $7,200 a month. So you're talking a substantial amount of money. So we were paying 10.8 cents. When we moved to High Point, North Carolina, we negotiated 6.8 cents. So we saw a 4-cent drop.
Yeah.
And, at that point, I think we were using 2.5, maybe 3 megawatts. And so, you start going 4 cents over 3 megawatts, $7,200 times 4 times 3, right? And you go, wow, it's a substantial amount of money. The only problem was when we went to buy the facility, because we bought an existing facility that had 8 megawatts available. And we went to the bank and I said, I'd like to finance this. It's commercial property, blah, 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 blah. What are you doing? Well, we're doing Bitcoin mining. Or crypto mining. We mine some Bitcoin, mostly Litecoin. But they were just like, you're evil. We can't touch that. We won't finance that. We won't. So I ended up paying cash for the facility. Didn't really want to, but it was the right decision to make at the time, and so.
That's because I remember when you were telling me this, how you moved it from here to there because of it, and you didn't tell me the numbers then. I thought it was really smart. Now I think it's even more because when that's multiplication on money.
It's crazy.
Right.
And then, as soon as Trump won the election, then prices start doing this. It leveled off and went down, and it's a roller coaster.
It always is.
But overall, it's been a tremendous move. And then we kind of looked at it and said, okay, now we've got 8 megawatts. We're only using 3.5, 4 now. We've got 50% capacity that we're not using. So there's something called collocation, where you can let somebody else come in, since you already negotiated, have the infrastructure and the setup for that additional power. You can rent them the facility, but you don't pay rent. It's a spread on the electrical price.
Right.
So we're getting 6.8. We charge them 8.8, so they're still getting a deal.
Right.
Right? So they don't. Their rent is paid through the arbitrage of the electrical price.
Yeah.
And so really, instead of telling them it's X amount per month, they pay 2-cent upcharge. So if they're using 4 megawatts, that's $7,200 per month per megawatt.
Yep.
So you're talking $28,000, close to $30,000 a month
Real money.
in funds that you go, well, wait a minute, we weren't really anticipating this. It's just
Yeah.
another income stream off of that entity, right? So in that facility. So yeah, that sort of thing is happening all the time. It's crazy.
And this is why I always tell people, be in rooms with people smarter than you. And when I met you, I was like, wow, I'm going to learn here. And, because a lot of people don't think that way. I'm starting to more and more in my business where now we're adding all of the downline companies. One, we can control it. They can't tell me no. But now another company is profiting from our services. So it's just us profiting another way. And, I think that for me in this stage, I'm keeping it here. I'm 53. I don't plan on going into Bitcoin at this point, but you never know, right?
Yep.
But I didn't expect to be the mobile home guy at this point either a few years ago. So I never say no. But right now, because Sharper will yell if I go outside of my core, right? And I'm really good at staying there because I'm not starting. Austin and I always talk about a Papa John's, and I don't like their pizza anyway. So we're not starting restaurants. But you just paid. You saved money and you're making money on the other half where people wouldn't have done that. A lot of people don't worry about those things. But I think when you learn, you should.
Significant sums of money, and when you go, wait a minute, if I can profit off of that, why wouldn't you, right? And you look at it, Tom, and I go, okay, most of my career I spent in single-family homes, right? So you rent a house based on the number of bedrooms and baths. Square footage is almost irrelevant.
Right, in rentals.
Right, in rentals.
Yep.
And then I moved into commercial, right? And I go, great, you charge for every square foot.
Right.
Right? And it's a triple net lease.
Which are great.
Typically triple net, right? There's exceptions, but for the most part, it's triple net, and that's where the tenant pays for taxes, insurance, and all the maintenance.
Just show you real quick. I had a concussion at the time, but I turned down. A guy owned a triple net lease that was post offices.
Oh,
and I was buying 3 of his houses, and I thought it was the greatest deal ever, and it was. It was 0% down, 0 interest, all that, and I didn't take the post offices. Now I'm trying to get the post offices.
That's the thing that I learned. I was like, when I decided to jump outside the residential side, I said I want to get into another asset class. I wanted to remain in real estate, but I really didn't know what I wanted to jump into.
Right.
So I did. I looked at trailer parks. I looked at multifamily. I looked at all. Huh?
Don't forget trailer parks.
I looked at it, but I couldn't find enough deals. So I wanted to understand it well enough that when I was looking at it, I went, okay, that's a deal.
Right.
I'm going to spend more time on that, right? And then we got into self-storage and assisted living were the 2 asset classes that we decided to concentrate on. And since that time, we bought, I think in 16, 17, maybe 18, we bought 4 self-storage facilities. And
you were building a few of them too, or trying to, weren't you?
well, we're building now.
Right.
Because those were all existing.
Yeah.
But just mismanaged. And we got great deals on them. We filled them up.
Yep.
And then in 21, we got ridiculous offers. It was like, you're going to pay me how much?
I think
like,
because that was the new shiny object, right? It was self-storage.
Everybody wanted in. And so I thought, great, we'll sell these and we'll just buy more.
Right.
And then I went back out into the marketplace. Right now you've got cash.
Right.
And you go, okay, now what do we do? And you couldn't find anything in self-storage.
That was worth the money anymore.
Correct.
Because what happened was all the investors jumped in and prices went up.
Yep.
Okay. And that's what's happening with mobile home parks now. So for sure, because we have one under contract, but it's a full build out, right? It's ground up. Mm-hmm. And I'm meeting with the GC to come in and run all the verticals for us.
Yeah.
But like you, it has to be a deal for me.
Right. I want some value add.
Yeah. Oh, but that's why we're buying it. So we got 4+ acres for $500,000.
Wow.
Okay.
Wow.
Owner financing, $200K at closing, 300 over 5 years, 0% interest.
Wow. See that slam dunk deal.
Yeah.
Yeah,
Because
that's-
and then they're willing to also be how we underwrite it could later on, where they're willing to be a partner, a JV partner, instead of a lender first position. So that way, if we do have to bring in underlying construction financing, we don't have to worry about it because that will be a first position.
Yeah.
Somebody taught me that literally at one of my investor meetups at a car.
Right. So there's little lessons that you learn that you go, wow, that is worth how much money? I'm always going, I've always loved going to meetups and going to events and hearing people speak, and maybe even a second or a third time. And why do you want to go back and listen to that same guy again? And I'd say, because I'm in a different spot in my life. I'm in a different point in my investing career, and I always hear something that I go, he might have said that before, but I didn't internalize that.
Yes.
I wasn't ready for that.
Well,
and so
yeah.
I definitely.
I think people don't realize, I mean, at this stage, I educate myself every day still.
Yes.
And what I always want to tell people is that as you grow in this business or any business and you educate yourself, things that come across that you didn't understand before, you understand now.
Yeah.
You know, before I became the mobile home guy, I was looking at mobile home parks. And I went to classes on it, and now it's like, So now that the dealership is taking off and we can have institutional financing, so I'm an operator still. And so I look at their financing way different than they do because I understand really how to use it more effectively than the people who are the actual lenders.
Sure.
Because I'm like, wait a minute, you're telling me I can transfer something for $20 from my lot to a project?
Those lenders want to be sitting in your seat, right? Lenders are great, but what I've typically found lenders to be very risk adverse, right? They just can't take that step, and it's unfortunate.
Well, people don't like that.
I love my lenders, don't get me wrong, but I wish I could help them take that step to get out of the lending side. But I mean, some of them are making decent money, so.
Yeah, I mean, you know, but that's also what we do is different. It's being an entrepreneur. It's not everybody's game.
Yeah.
It's like you want to be on the I say it's the tightrope without any pants on. Be comfortable there. Yeah. And most people don't want to see that.
And it takes a while. It's learned, right, to be comfortable in that position. So it's just like anything. You go through enough and you get experienced, and then you learn the business and you understand the business and you make money in the business.
And then you grow the business. And then
you grow the business.
And you know, it's at 53 what I found is to try to enjoy the journey more and more, because when this is whatever this one is, when I'm done, it's not like there's not going to be another mountain there.
Right.
And you've had a bunch of those, and you were just on a mountain too in Alapaca, right? That's another story.
Yeah, so when I look at what I was doing early on, right, I bought that first single family home, bought another one, bought another one, bought another one. Before you know, we've got 24. And then my full-time job ended, right? We were in the map business, paper-based maps, and that was 2007, 2008.
Wait, that was paper-based. Most people don't even know that, right?
Yeah. Well, they used to make maps on paper? What?
I showed my kids phones on a wall with a cord, and they're just, was that in a pyramid? It's like, yeah, it was in a pyramid. Okay.
So, but my whole perspective was, okay, if I can take these 24 homes and I can hold them for 30 years, because they all had 30-year fixed-rate financing, right? And so that then, once they pay off, that provides great retirement income, right? That was my thinking at that time.
Right.
And then as you progress and as you learn more and as you educate yourself more and as you talk to more people, all of a sudden I went, my goodness, these 24 homes are a stepping stone to something bigger.
Yeah.
And that's when in 2008, after the map company ended, I said, I got to reinvent myself. What am I going to do?
Right.
I spent 20 years in the map industry thinking that was going to carry my career, right? And so somebody said, Greg, why don't you go into real estate full time? You're already really in real estate.
Yeah.
You got 24 houses. I said, no, I don't think I want to do that. So they said, well, I didn't realize what was going on in the real estate market because I had stopped buying in 2001.
Okay.
So 2008 hit, I hadn't bought a house since 2001. And they said, the real estate market is really changing. Why don't you check it out? There's some auctions. And I said, really? How do those work? They go, well, I'm not sure. Go check it out. So they told me there was going to be one in Sanford. And it was, I can't even remember the name of it. But anyway, it was before they were online. And they would set up in the yard. There'd be multiple houses for sale. They'd pick up the nicest house of the group. And then they'd hold the auction there. And it would literally be a speaker in the yard with a microphone and an auctioneer going, hey, it's and they would literally auction off the house. So I went to this auction. I just wanted to observe. I wasn't intending to buy anything. Right, so I'm sitting there watching, and they auction off the first house, and there's 11 bidders. They've all got their little paddles, right? And the first house sells. The second house was a little Mackle house in Deltona. Double lot, fenced yard. They just painted it, put new appliances in. I'd looked at them both because I wanted to understand what I was dealing with. And so he starts selling this house. Nobody bid, Tom. It was crazy. It was like, you know, I'm looking around, and the auctioneer stops the auction, and he says, is anybody wants to bid on this house? And I looked left, and I looked right, and I said, nobody is going to bid on this house. So I raised my hand, and he said, where's your paddle? Didn't you register? And I said, no, I didn't. I don't know. So some guy takes me by the hand, gets me over, gets me registered, and luckily he'd been in the business a long time. He said, Greg, you know, I've seen these houses sell for $10,000 because that's the minimum bid, but I've never seen one of the sellers accept that bid, and they had the right to not accept your offer. Right. So he said, I've seen a lot of offers be accepted for $10,000 or for $15,000 or more. Okay. So what would you like to do? And I said, I'd like to call my wife.
The lawyer.
So I called Jane. I said, honey, I'm going to buy another house. You know, it's $15,000. She said, did you say 55? I said, no, $15,000 for a house. And she said, well, buy it. So we ended up buying. That's the first one we bought in our self-directed Roth IRA. And
more savings down the line, and earnings.
Exactly. But yeah, so then after that experience, I followed the auction sites around. And that's all that I did. That was my source, right? Just buy one. Okay, I'm going to 3 auctions this week. I'll buy one at this auction and one at this auction. And then all of a sudden they started going online, and then people were bidding from home in their pajamas, and they didn't understand what they were bidding on. They never looked at the house. They're just bidding on it based on what they're seeing online or what they can get from the property appraisers' websites. And it's like prices started going up. I went, well, I got to find a new way to find properties.
That was, I think, when you started to put all that mix in, and then you bring in people from Canada, California, who don't have a clue what they're doing anyway, never saw it. It just, the good deals have to come to an end. That's what happens.
Yeah, it's like everything, right? This marketing strategy works for a little bit, and you have to be constantly working on the next strategy because you know this one's coming to an end. You just don't know when. Right. So it's constantly working. Okay, I'm going to try this. I'm going to try this, and you're constantly trying different stuff and trying to figure it out.
I kind of love that, though, right?
Challenge.
It just keeps you busy and keeps your mind working.
Yeah.
You know, I trained somebody in the office recently, who's my personal admin, to look for land. Right. So yesterday she brought me what she thought was a deal, and I'm like, holy crap, this is an amazing deal. I bought a lot in the community for $29,000 with closing costs, right? A lot. No, that's what I bought before. She got me a home in the community for $15,000.
How do you, if you're not out looking, right, and you don't understand the metrics and how to evaluate these things, you're not going to find those deals.
No, right?
But every once in a while, you find this great deal. Now, back when I was doing it in 2008 through kind of 2016 timeframe, is when I was flipping, doing turnkey. So I have a property management company as well called the Property Manager Guys. And so I was buying houses, rehabbing them, putting tenants in them, and then selling them to investors. And then probably 99% of those investors said, hey, we need somebody to manage this. So
Right.
then I was managing.
Yeah.
So I organically built a property management company, not because I wanted to start one, just because it fell in my lap.
Well, we did it the same way because we had so many houses, we had to have a management company.
Right.
And what I've learned about property management, I never want to do it again. Okay?
Tom, that's exactly what I learned, but a little late, right? I thought I was saving money by managing all my own homes. And what I was really doing is I was taking up a lot of time.
Yeah.
I was doing so many things terribly wrong and inefficient. And it cost me so much money. If I would have taken that same time and effort, and I would have spent that time and effort buying more homes and turning them over to somebody that was a professional property management company, I would be so much further ahead now. But now, right, I've now got a property management company, and the reason I do well in that company is because I learned all those lessons the hard way early on. And so I think that's what makes me a better property manager now, is because I did learn all those lessons. Yes. And I pretty much treat everybody's house like it's my investment. I go, okay, you know, what would I do if this was my property? And that pretty much, you know, is the right decision in most cases.
I want to put an asterisk there. You only know all that stuff because you did it.
Right.
And if you didn't do it and you turned it over to a property management company in the beginning, you wouldn't know if they were doing you right or wrong. And I looked at it that way because my wife runs our company now. And in the beginning, she was doing it my way. And I'm like, no, you're going to go and learn it the right way. I did it out of necessity. You don't have to do that. So go and get the certifications, go and do this. And then she's like, after a year, she's like, you weren't really doing this well. I'm like, I never said I was doing it well. But I was doing that and all the other hats. And then I said, but look at those mortgages on what we owe. I did that well. Okay? And she did agree with that. Yeah. But we know how not to do it because I did it that way, right? Yeah. And so I think if you don't have that under your belt, because there's a lot of bad property management companies, you know that.
A ton of bad
okay?
ones. And
when you see the numbers, sometimes it makes it unaffordable. Because I was reading Ron, right? He gave me one of these contracts, and I read it. Now, very smart people, him and his wife, right? Doctors, PhD. Okay, I'm like, did you read this? He's like, well, not all of it, because we know him. I'm like, yeah, you need to read page 7. Look at all those fees. You will not make a dime on this property.
Yes.
Because you have to use all his subs. You're dead.
So if a property manager mismanages it, and then they don't get the right tenant in, and then you got to evict that tenant, and then you got to go through the downtime and the fix-up cost and everything else. What I found is single-family homes were good because it got me into the business, but they didn't make me a lot of money. So I think at our height we had 90 homes.
Nice.
And you know, we sold off a portion of the portfolio in 2016 when we bought the self-storage facilities. And then we started in assisted living. That's a whole nother story in itself.
It's been challenging.
And then selling them off in 21. And basically then I took a look at it and said, because I started doing 1031s. And I started going, wait a minute, I've got all these homes now. A lot of them I bought in the 90s, and they're starting to pay off.
Right.
Right, and I'm starting to lose that depreciation. And so I went, okay, it's time to turn these homes. Is it really time to turn them? God, they're just about paid off. My goal was to get them paid off and then enjoy the income. Do I want to sell these? Do I not want to sell these? So I went through a whole process of going, okay, I'm going to refinance them. I'm not. I want to hold them, right? It's an asset. And when I went to the bank to refinance them, you'd have this house that's worth $250,000. The bank would appraise it, and it would appraise at $175,000. So now there's $75,000 of your equity
gone,
just floating out there, right? You can't access it. Then they say, well, now we'll give you 50 or 60% loan to value. So now that $250,000 home is only getting you $125,000, right? So you're going, wait a minute, now I'm only accessing 50% of my capital, of my equity stake. How can I access 100% of it? And the only way that I could do that was by selling the homes.
Yeah.
And so we looked at I was always tracking my return on investment.
You're really good at what these other things you track. But we'll jump into that in a minute. Finish, I'm sorry.
Yeah, so what really caused me to make that jump was I looked at my return on equity. Right, so I've got a $250,000 home that I'm making $700 a month on, and so I'm making $8,400 a year on a $250,000 investment. not a very good return. So I say, how do I get closer to a 10%? Right, if you're making 10%, I'm making 25,000.
Right.
So I'm making about a third of that, so
Yep.
I'm making about 3%.
Yeah.
3% or under on a lot of them. So as I turned those out, it quadrupled our cash flow. I mean, it was just truly amazing going through that process. And just like starting back into real estate in 2008 when prices were, bottoming out,
Yep.
I didn't realize, and you never do, you never realize how good it is at the time. But, looking back now going, wow, I wish I was smart enough to have planned that, right? But I didn't. It was just like I fell into it because of the situation with the map company. So I fell into real estate when it was bottoming out and bought and bought and bought and bought and bought as fast as I could.
At the right time.
Right, at the right time.
Okay, because not a lot of people had cash.
Right. Well,
The economy was cratered.
right.
And people don't realize that. I think there's too many people who are scared to stay on the sidelines. And you say, look, we're both faith-based men, entrepreneurs, and you were pushed that way by somebody else, right? This is your calling because you do a lot of good work with this money too. So, and the more money you made, the more you give. So maybe it's not just by accident, right?
Absolutely.
And
Absolutely.
and maps were paper; they're gone anyway. And I remember when you were telling me the whole 1031 with the houses and how you were selling them and then bundling them. I remember running home and telling my wife, "Hey, this is what we need to do," and she's like, "Get out." I'm just learning this. Get out. But I'm like, "Yeah, but." She's like, "No buts. You get out."
There's a right time for everything. And again, we fell into the right time
Right.
because we did all those 1031s right before rates went up.
Yeah.
So all of our rates were 4.5, or 5%, right? On significant, loans for those commercial buildings.
Oh, yeah.
So we did 9 1031s in the first, really 6-8 months of 2022, and deployed all. I think we sold. I think we've still got 25 residentials left. So we depleted again. We probably sold another 40 or 50 properties at that point. And
You're taking this one box with multiple people in it, and you're going over here in this giant box for a better return, but it's really less of a hassle.
it is.
Because once you put those commercial people in, it's like, hey, just send me the money.
They sign typically 5-year leases, sometimes 10-year leases. With those 5-year leases, it's typically a 5-year renewal, right? And most of them, as long as their business is doing well, they renew for another 5 years. So you got a 10-year tenant.
Yeah.
You don't spend anything on the maintenance
Yep.
other than the roof. And typically, if it's multi-unit, then you're doing the parking lot and the mowing and taking care of the shrubs.
It's not,
But you hire a service to do that,
Yeah.
right? So really, all you've got is the roof, and then an occasional resurfacing of a parking lot or something like that. And that gets expensive.
Yeah, for
but
sure that does. But
it flows into the numbers, and it's not expensive in light of the numbers that you're getting out of commercial property.
But there goes when I said in the beginning, you're a smart guy. And so look, you use single family as a stepping stone to this. But what most people don't realize is along the way, you must constantly educate yourself. You must constantly look for this. I think people get so focused on what's just in front of them that they just don't raise their heads a little bit.
Well, I wish more single-family investors that get a portfolio would kind of look and go, where's the next step, right? Because I think they struggle. I struggled, right? I didn't know where should I go? What's the next step? Right. Is this the last step? Do I retire and hold these properties for retirement income? And I've got a couple friends that's what they're doing. They're just holding on. And I said, guys, there is a different way.
Right.
But it's more risk, right? Because now you're selling them, and now you're signing a note, right, for several $1 million on a new loan, right? So now you're putting yourself in more debt, and a lot of there's goal. So it depends on what your goal is.
Right.
Right? And that's, a lot of people ask me for advice, and I say, the answer is always, it depends.
Well, what's your goal? Like, what's your end game?
What are you trying to accomplish?
Start with that end in mind. Tell me what this is, and then we can figure it out. If you don't know where you're going, how can I tell you how to get there?
Stephen Covey,
Yeah.
Start with the end in mind, and it's gotta, it's gotta flow like that. And a lot of them don't know where they want to go.
Right.
They've built this, but yet they're struggling, going, okay, what do I do? How do I situate this? How do I structure this? How do I get to the point where I can take the next step? And a lot of them are scared because they don't know what to do. They don't know who to talk to. There's not many people that have done it. So, you know, that's why I love talking to people saying, these are some options that you can look at. It might not, the asset classes might not be for you, right? You may love office, you may have experience in medical, you may have, you know, something else you're looking at, but when you start to look at all of the options, at least start to explore them and look at what might be possible, because the possibilities are just amazing.
But that's what comes with looking up, right?
Yeah.
Just look up and see what you can really get your hands on.
Tom, I started saving. So every seminar I'd go to, every event that I'd go to, I started saving my lanyard with my name tag, right? And all of a sudden, I've got this huge group of them. It's like a Mr. T necklace, right? I put it on, it's like, but then, you know, I pull it off and I look at it and I go, well, I went to this one and 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 this one. And I go, wait a minute. I had a plane fare with every one of those. I had hotels with every one of those.
Yeah.
I had a rental car or Uber with every one of those. I had meals with every one of those.
Uber.
I had entrance fee with every one of those. And so you start adding those up and you go, I've spent $1.5 million on my education.
Absolutely.
Right? I've got this necklace of lanyards and name tags to prove it, but how much has that made me? That has made me, over my lifetime, it would make me countless millions of dollars from attending those things and educating myself.
Absolutely.
And finding out that there's so much that I don't know, and I've still got to learn. And
it's great that you said you still got to learn, you know. We're in a mastermind together. I was in my first ever one with Harlan years ago, and I thought before I entered that, I didn't need to do it. After that, I jumped in and swam in a bunch of them. And I can tell you, I spend more a year on my education than I spent on college, the whole bill.
Yeah,
and
I do
it
too.
compounds all the time, right? It's either what I learn, the network you become a part of, like I'm in room, like, so one of the groups I'm in, Collective Genius, so I'm in the top level now. But I'll always say I'm the littlest person there. But
Right.
I won't be that little forever because I'm going to ask the right questions, you know, because that's the part of being there. I think people are afraid of that because you got to be a little vulnerable to go and say, I don't know this, but I'm going to learn with you.
Well, and then there's so many people that are hesitant to share, right? I had this success, right? I can't share this with anybody else because it could create more competition. I'm just the opposite. I want to
Same.
share with everybody, tell everybody, because I think everybody should be doing it. And I think there's so much out there. There's room for everybody.
That scarcity mindset.
Yeah.
I teach people my business all the time. And people say, aren't you afraid of being caught? No, I don't have that, right? I'm not worried about that. I look at it as, with what we do in building affordable housing, if I teach someone how to do it and they go and help somebody in affordable housing, that's us helping somebody.
Right.
And if anybody catches me, blows past me, whatever it is, that's my fault or that's great on them. I don't worry about that.
Right.
You know, you can't. But that's our business, unfortunately, with a lot of people. Look, I like and share all of my friends' listings. People say, oh, you'll never get ahead that way. I'm already ahead, right?
Right.
It's just we haven't changed. We don't need to change our lifestyle. But you still live over there. Yeah, you know my mortgage is? My mortgage is less than your car. That's why, right? But ask me how many rentals we have.
Right.
Different mindset. Like, I used to live in Miami and had a crazy lifestyle. I don't have that anymore because I grew up dirt poor. I didn't know how to treat money.
Yes.
So
Jane, my wife and I, we grew up the same way.
yeah,
Right? Families with not much income, certainly not enough to invest. Basically, you know, not paycheck to paycheck. You know, it wasn't quite that bad, but there just wasn't extra money there all the time. So your parents can't teach you what they don't know.
well, my parents were, you know, immigrants. My dad had cancer and survived, and he had a lot of issues. So when I made money, and when I went into the health food business, it was the right time. We were good at it. We were profiting $100K a week in the 90s.
Wow,
I had
that's serious
11
money.
cars in Miami Beach. None of them made in America. That was one of the stupidest things I ever did, right?
Yep.
And you won't catch me doing that again, okay?
Yeah.
I don't even own a car. My company owns my car. But I had to learn that. But I teach my children that now. My son knows way more than I ever did at 30 about money.
Yeah, one of my proudest moments is my son.
Oh, yeah.
Right? He gets all the concept, he understands them, he's implemented them, he's growing, he's
Isn't that amazing?
You know, it's just wonderful to see that and go, wow, he really. I remember I took him to a land conference, Jack Bosch, and I'd taken him to a bunch of conferences, but this one really stuck with him because he actually ended up selling a piece of land he had money in his Roth IRA, bought this piece of property, sold it for, I think he bought it for $8,500 and sold it for, I can't remember now, $10,000 maybe. So made, $8,150 in his Roth IRA in a matter of 3 weeks. And it was like, all of a sudden you could see the light bulbs start going on. And
Yep. My son wants to be an accountant. He says, "Do you need that kind of service?" And I showed him what I pay a month just for the in-house one. He's like, "You're going to pay me that?" I said, "No, because you're not that yet. Just because you want to be this, you have to attain that to get paid that."
Right.
But then I showed him, our children own houses in their IRAs. Okay, and I showed them how we bought it and all that. They're like, "How did you do that?" I said, "I learned to add value to things.
Yes.
My time is worth what I know. It's not worth this much." And I showed them how we borrowed $140,000 from an investor, their IRA. We put $60,000 into it. We rented the houses. Then we refinanced out. And they appraised for almost $500,000.
Wow.
Okay? So he's like, whoa. But remember, when I say 140, that was 140 for 2 houses. Okay? 30, and then we made money on the rent. And he wants to learn that.
Yes. And I think that's valuable for kids to understand that, because they're not teaching that stuff in schools.
No,
it's crazy that somebody's not out there providing that education to kids. Maybe the motivation isn't there for the kids. Maybe the desire to learn that isn't there. But They should be saying the goal is to make enough passive income, right? So you can pay for your expenses, and then you're free to do whatever you want to do. You got this money coming in. It's paying for your lifestyle and all the expenses you got. It's paying for your rent and your taxes and your insurance and your water bill and your electric bill and all your food and your car payment
But the problem is the school system teaches people how to take a test, and it was built on the fact that they're going to make factory workers years ago, right? Now our kids go to a different school. Thankfully, they teach them different things, but they still have this anti-entrepreneurial mindset. When he was going into 9th grade, and we were having our conference, what he wants to do. He says, "Well, I want to go into business with my mom and pop. I never want to work for somebody." And I was like, "Yes." And then the counselor said, "Well, working for somebody isn't bad." And my son's like, "Oh, yes, it is." And my wife's kicking me under the table because he's what I taught him.
We kind of took the same approach, but I think letting them go out and work for somebody else just to get that experience and that understanding that, and it depends on the personality, depends on the kid.
Right.
But a lot of times it gives them a different perspective of coming then back into the business and realizing how good they have it.
Right.
Right. So I think there's a certain level of pushing them out of the nest and making them fly by themselves for a bit.
Well, I'm a bit, you kind of know me a little bit. How like I kick them out a little bit. So
yeah, I know you do, but I'm just talking. I've seen a lot of kids ruined. Right, because they expect everything and they don't feel they're above doing these things, and I think.
Well, my son was being raised by everyone that way because they were the bubble wrap. Okay, so my wife and family, they came here from Guyana, and they struggled to bring everybody here, and then with the grandkids, it was all of a sudden the way we did things before that worked out really well. We're not going to do that. And it was, they can't go outside in whatever spring in Florida because it's too hot. So you're saying it's hotter here than in Guyana? Oh, well, no. Oh, okay. And I always brought it back to that because they turned out well, so why not keep doing that? But what happened is they came to America and they got soft.
Yeah.
But I believe, and my job as a parent is to raise responsible adults. Greatest and worst day of my life, they're not going to need me one day.
Right.
I did my job.
If you did your job right, that's going to be
But I'm still going to be like, they don't need me, but I did my job, right? And I tell my wife this, and she's like, "No, I don't want to ever have that." But then you didn't do your job.
That's right.
Right?
Yeah, that's the goal.
Yeah. I want them, if they stay in our house forever, one, I'm going to move and not tell them where I live, I say. But then they didn't reach their potential.
Yeah.
Okay? And my son's school, he's dual enrollment. He's going to finish college in high school. That's incredible to me because I was really good in sports, and I could slack over here. He doesn't do that. And he has the world open to him then. And it's just giving him, we read books together. We do these things together.
And explaining stuff to them, like the IRAs, right? They don't. When I first tried to talk Nick into starting an IRA, he was like 19 years old, right? And he said, "No way. $5,000 in a Roth IRA? Not for me. I've got other plans for that one, right?" And so I said, "Humor me. Let's look at this spreadsheet." And I'd done the spreadsheet before.
Right.
So I kind of knew what I wanted to show, and we started setting up the spreadsheet. And it was if you can get a 10 to a 15% return on real estate, and you invest $5,000 now, what happens in 40 years when you're 59 and a half? What does that? And my criteria was I want you to put $5,000 in now, and then each year you're in college, I want you to put $5,000 in. So you're going to work during college. You're going to make money during the summers. You're going to,
Whatever it
script
is.
and save. However you're going to make it out. You can do some work for me and make some money.
Yep.
But you're going to put that earned income in a Roth, and we pulled down the spreadsheet. Right here's all the $5,000 for the 4 payments of $5,000, and I believe I used 10%, and we pulled it down, and it was over $5 million. And his eyes about bugged out of his head. And he went, "Oh my, there's that's it's real? Oh my."
Well, my son's the same way. Numbers, and he's good with numbers, right? And there's no give anymore. He's going to be 16, and he needs a car. Okay, so I'm going to give him my truck, but it's not for free. There's a loan attached to it.
Good. I was going to say, don't give it to him.
No. But then he came to me and he made a deal with me. So now he's going into college in junior year, really hard. He doesn't need to study. He's going to get his butt kicked. That was my problem. I didn't need to study either. So, but he said, if I get all A's through college in high school, will you forgive the truck?
I said,
and what do I get if you don't get all A's? Got to be a downside, right?
Right.
And he came back later because he wasn't prepared for that one. And he's like, well, I pay for it. I said, yeah, but then you owe me interest because you didn't make payments along the way.
I like it.
And now we're negotiating the number. Because he's like, well, can we do 0? I said, we can, but I'm not going to accept that. It's like, but you always get that. No, not always, but doesn't mean they accept either. Because he was never a good negotiator. Now he's learning, hey, the details really matter, okay? But he was raised that way to understand that you have it easy. Mom and dad had it hard. We're not going to, fund your life at all. Like we did the Florida prepaid for him. He doesn't even need it, they said. He's like, he's going to get it all paid for. He's like, hey, what are we going to do with that money? I said, you mean Mom and I money? But he thinks like that.
Well, it was interesting. As my kids were going through their last couple years of college, they never took out student loans, right? They had the prepaid, and they had great futures, and everything was paid for. They were getting money back. And all of a sudden we started looking at it going, wait a minute, those student loans, you don't start paying on those until you're out of college, and then there's a grace period, right? And the interest rate is super low. That's the cheapest loan you're ever going to get. So they started taking out student loans and investing that money, right? And it's like, wow,
I didn't know you could do that.
Why didn't I tell them that? Right? Why didn't I explain that they could do that? Because I didn't understand myself. And so we kind of learned that
ask
together.
about that later, yeah.
And so, I think they should do that. Take out the maximum amount of student loan you can get if it's getting a low interest rate, and it's just an arbitrage play.
Yeah.
Right? You're paying 4%.
But you see the difference in your mindset right there. That it's like I learned something. I knew I was going to learn something every day with you, but it's like, oh, wait a minute, because what I'm going to do, I'm going to tell my son about it later. I'm going to make him do the work on it.
Yeah.
Okay. Because I want him to do it because he's going to profit off it.
Yeah.
Right. And learn it that way. I think that as parents, that's one of the things we always should do.
One of the other things that I did with my kids, and I experienced it myself, I did an overseas study in college. Okay. So I went over and took a term of school in Bedford, in London. And so I really encouraged that with them, and I made them pay for it. And
nice.
They really, I think, got a lot out of it. And it just getting out of your comfort zone and going someplace else that's way different.
Oh,
and
yeah.
Mom and Dad aren't around. I just think that really paid a lot of dividends. In fact, my daughter now lives in Australia.
I think that people are afraid to do that with their children. I push them to be uncomfortable because that's the only way you're going to grow them. And if I do it now, they'll embrace that later. My son, he's Indian. okay? And so their culture is different for sure. And he wanted to do jujitsu. Everyone said no. I'm like, yes, what's the rule? Oh, I can't quit. I went the first day because this was right after COVID. He was really heavy. He gained a lot of weight. Everyone was home. Running around the mat, he wanted to quit. But I signed him up for 3 months. I paid for 3 months. You're going for 3 months. But if I wasn't in that room that day, Mom lets him quit.
Right.
But I'm sitting behind her just shaking my head. He got really good at it, okay? Then going into high school, he never, ever talked about football. Never. Comes home one day and says, hey, Pop, I want to play football. But everybody said no. And I'm, who's everybody? And I knew who they were. Right? And I'm like, what's the rules? He's like, I can't quit till the season's over. And let him play. So then I show up the first week. You know how hot it is in August?
Oh, gosh. I
I
can't
know.
imagine some of those
And
poor
he didn't
kids.
condition. And I'm watching him. I pull in my truck, right? I had...
How many times did he throw up?
He didn't.
Oh, wow.
Okay, at least when I was there. I'm watching for the whole week, sitting in the back of my truck. I got a chair. I got a shade because it was really hot, and I watch him. He was never last in any drill. And then I asked him that day, and this is one of those proud moments. I said, "What were you thinking out there?" He's like, "I just didn't want to be last." He's like, I see how hard you've worked, and I know it's all worth it." And then he said, what every dad wants to hear, "Can we go to Dick's and buy cleats and gloves? I'll pay for it," he said. I said, no, I'm paying for this, right? Because that's what I'm supposed to do, because he said what he should. Because I didn't learn that. I wasn't taught that. My parents didn't know that. They didn't have that ability. And, I have said to my wife that when I was on this journey, that if I only knew this years earlier, what could I have done? And now I look at my children, and I'm like, oh, they're going to be the ones who do much more than me.
And you touched on something, you talk to your wife, and I think that's so important too, to bring your spouse into the conversation and what you're going through. The first time I went, it's the Real Estate Guys Investors Cruise, right? And I think we went to 5 of them. The first one I went to, I came home so excited, learned so much, and tried to download it to my wife. And it's just going,
Yep.
and I said, okay, this isn't working. You've got to come and experience this.
Yeah.
So she went for the next 4 years with me, and we ended up taking my son on 2 of them. Well, one of them we paid for him. One of them he won a contest to come back the next year. But yeah, it was wonderful. But I think it's so important to get both spouses on the same page and focused in the same direction and moving that way. And Jane and I struggled for the longest time just because we didn't know. When we first got married, we had 2 incomes, no kids. And we said, okay, we can live a larger lifestyle or we can go another direction. And we decided to live off of my income and bank her income for investment purposes. And so...
No Ferraris there then.
Definitely no Ferraris, no gated communities, used cars, right? That's the way we lived. That money began to accrue. And I said, honey, what do you want to do with the money? She said, I don't know. I said, what do you want to do? I don't know. Because again, our parents hadn't taught us.
Right.
So we got this money sitting in the bank.
Yep.
And finally I came up with this idea to buy a house. And ran the numbers, explained it to her, honey, this and this, we're going to pay this much rehab, and we can get this much rent. This is great.
Yeah.
And
stepping stones.
And she looked at it and she said, no. And I said, well, obviously she didn't hear me, right? Because this is a great deal.
Yeah.
So I raised my voice a couple octaves and explained it again. She says, no. I said, why not? She goes, because I'm working full time. I do not want to clean this house and help you fix this house and do all this stuff after hours and on weekends. I want to enjoy my life, and I don't want to do that. I was like, oh, gosh.
You didn't factor that part in?
No, I just thought she'd say yes. So what do you want to do with the money we've got sitting there to invest? She goes, I don't know. I said, well, so Tom, in my infinite wisdom, that I'd probably been married maybe a little over a year at that point, and I'm ashamed to say that I bought the house without her agreement. The day the deed came in the mail, she got home early from work and got the mail and opened the deed. And I got a call at work, and I came home rather quick. And it was one of our first big fights. And she read me the riot act, rightly so. And she said, listen, I can't believe you did this. I thought we agreed that we were going to agree on what we were going to invest in, and so there's nothing we can do now. You've done this, so you need to take care of it. I don't want to hear about it. I don't want to deal with it. It's your responsibility. So that's how we ended up buying our first house. It wasn't a pretty thing.
Yeah. Turned out well.
Well, it did. It didn't start the right way.
Right.
But, you know, it did turn that way. And she gradually, you know, the next one I was very timid in asking, okay, you know, two or so years later, you know, this thing is up and running, and again, we're living on my income, so now there's income coming in from the house, plus there's income coming in from her work.
But she saw that the house played out well.
Yes. Okay. And so she agreed to the second one, and then the third one was easier, and the fourth and fifth and sixth and seventh and eighth, and it kind of built from there. So, but you know, I'd encourage people that, you know, live below your means. Maybe you have to drive a used vehicle for
hard for
10
people
years
today to realize.
Maybe you have to live in a less expensive house than you otherwise could, but save that income, because you don't realize what that compounding is going to do in those early years and what you can do now. I mean, I don't have to work now. I get to work because I love what I do.
But it's different. So, you know, if you don't go to work thinking I have to do this, I'm like, I love what I do, right? It's not a work. It's not a job to me then.
I don't know when I'm working and when I'm playing. It's like, okay,
well, that's
am
why
I working?
That's why I have two different phones.
Yeah.
I know when I'm not working anymore, because, you know, I have to do that.
Yeah.
But it took time to realize that. When I decided that I wanted to do something different, I went to my wife, and I had a trucking service. I was doing well, but it was eating up my weekends. I thought by going from the consulting to this service, because it was a client who we consulted for, I'll buy trucks, and what do I have to do? A heck of a lot. And I said to my wife, I said, I'm so much more capable than what I'm doing. And she looked at me and said, go do what makes you happy. And I was like, what? And but then I jump into real estate, have no clue. I made $4,000 my first year total, not profit, total. And I said, I got to go out on my own and figure this, because how could I go back? She says, go do what makes you happy. It wasn't go make $4,000 in a year either, because that was an issue. She didn't know how bad that first year was. But thankfully, I hired the right mentor, coach, and went down that road, you know?
Yeah, that's something else.
Yeah.
A mentor, and
I tell people that, like, do it earlier.
Yes.
I thought I didn't need it. And, you know, I hired Marlena. And however, like, nice she is, she's hard. Like, this great Christian woman, but, man, we were doing a Zoom on a Friday night. I had to have these 5 questions answered. And I thought I was going to get my validation. She beat me up. I always like to say, I had my little balloon with 5 balloons here. She popped them all and basically said, are you stupid? If it was a guy, it wouldn't have been so nice that night. My plan was to quit Saturday morning, but it was COVID. I had to babysit my daughter. She was like 2, I think. And it was baby shark and all that night. And I woke up the next morning, said, the best thing that ever happened to me. Right. And I'm going to become a sponge in this business. And if you go from that day here, it's like 4 years.
Yeah, you've gone tremendous over a short period of time.
But I still think
much more than I did, right? I took a long journey, and that's most people, right, looking and said, well, I want to do what you did.
What would be different today knowing what you know to people? Like, when I ask you questions all the time, because that helps people leap, right?
Yeah.
And you're a giver like I am, in the sense that I'm going to give you, hey, this is the mistakes I made. Don't just ask the good stuff. Ask talk about the pitfalls, because you're helping people over them. And that's what people don't realize. It gave me, remember that old video game? It was like a pitfall. You're giving me the line to jump over.
Right.
And I don't have a problem giving that to people. It's just people don't believe that's the line sometimes.
Right.
This is mistakes. Don't do it.
Well, you know, Roth IRAs, investing in real estate, all these things. I tell hundreds and hundreds of people. Not very many people actually act on it and do something with it. So, you know,
they all have this box they're in, and that's why you should never have a box. As an investor, we need to just drop every walls and just look 360. You know, I don't care about cash flow. I care about appreciation. Appreciation, depreciation, cash flow, you know, because the portfolio we kept in 3 years, $3 million raise.
Yeah. How do you make that someplace else, right? Can you make that in a job?
Nope. And we were sleeping when that happened, right? So my wife said I did a good job there. It's the only thing in property management I did good on.
See, we found the same thing happens with commercial real estate, except by a multiple of 4.
I know, I'm trying to
So
get her.
4 times more appreciation because it's 4 times more or 5, 6, 7 times more valuable, right? And so that appreciation, that value while you sleep happens on steroids.
Got to be sleeping
So-
and making money or you're in trouble.
Yeah.
We today, with the dealership, we became bankable recently, and that was a journey because Gary said you got to become bankable in December of 23. So it took all this time. And so they were like, hey, you've been in business as a dealer for this amount, but they wanted me to put $400K into a CD.
Yeah.
Because that was and then that would be the deposit for all this other money. And I'm like, did you open up that folder? Right? They didn't open up the folder. What?
Yeah.
Because we got everything appraised for them recently. They're like, oh, yeah, we're okay right now. So they're using that instead of 400 in cash. I would never do it anyway, right? 400 in cash into a CD. A CD? No. But you'll get the interest. What I can do with 400 in cash is way more than interest, you know? But that's what that real estate plays into, because now we're able to finance floor plan loans, we're able to finance investor loans to buy from us, and we'll do their projects now.
Yeah.
That's what I've worked on really hard for that.
You've got a great system set up and great opportunities to expand that significantly. So, yeah.
That was because I've learned along the way, and again, I'm an operator, and they give me this sheet on what you can do with the loan, and I'm like, you guys are missing so much in there because they don't understand operations.
Yeah.
8% interest. Yeah, it's kind of high, but I know what I pay. I pay you, right? More than 8%, okay? And a $20 transfer fee. So you order a unit, you transfer it to a sale for $20. When do you see that in real estate? Never, okay?
Yep.
But that's the difference as you grow and learn.
That's funny that you say, well, you pay me more than, because Tom borrows some money from me.
A lot of money. I appreciate it.
Well, but you're using it
win-win.
smart,
Yes.
right? Because you're paying me, but then you're arbitraging that, right? So you're paying me X percentage, but you're making an additional 10% on that. So you're using my money to make you 10%.
But but that's business.
Yeah, absolutely.
If you're not borrowing capital and you're living, unless you're, a billionaire, millionaire all the time, you're not going to grow your business because you're going to be, it's like the olden days when there wasn't financing available. If you're living out of a checkbook to run your business and you need inventory or whatever it is, you will not grow.
Yeah.
Okay?
I want to jump back and talk about, when we were talking about learning lessons and learning from your mistakes. And that's something I was on the board of CFRI for 5 years, served as treasurer for 5 years. But I think it was the 3rd year in, maybe it was the 4th year in. And I said, I approached the board and said, I want to do something different because they have what's called the deal of the month. And, so somebody gets on stage and says, I bought this house for $100,000. I put $50,000 in it and I sold it for $200 and I made $50,000. And everybody says, wow, what a great job. And, it is. It's a great job. But I said, I want to do the dud of the month.
That's where that came from. I haven't done the dud. I've done the deal a couple of times.
And the dud, they said, Greg,
So
great
important.
idea, but nobody will do it.
Absolutely
Nobody will
wrong.
get up on stage and do a presentation and say, I bought this house for $100,000. I put 50 in it, but I could only sell it for 130 and I lost $20,000. And I said, okay, I will do the first 12.
Nice.
If we can't.
Oh, I remember one. Oh, I remember you talking about water heaters and fridges in a house. It was over by Sanford area, and I'm like, what? And I remember that, yeah.
Yeah, so I've had more people come up and say, I learned so much more from the dud of the month than from the deal of the month.
Yes.
Because it forced me, and I knew a lot of the lessons that I'd learned, but when I had to go back and analyze it for the presentation, because you got to put together a little PowerPoint presentation and have all your numbers and explain why you did this and what you learned. I learned so much more going back and analyzing my mistakes.
Yes.
And that has helped me so much. And again, people get more out of the dud of the month than they get out of the deal of the month. And I think that should be applied to people in general, right? I made a mistake. Oh, I don't want to talk about it. I don't want to tell Tom I made this terrible mistake because he's going to think that I'm stupid, and everybody else is going to think that I'm stupid, so I'm not going to tell anybody about it.
That's a social media mindset
I want
today.
to hide it,
Yeah.
right?
Yeah.
Is there a rug here? Let me sweep it under the rug so I don't have to tell anybody about it or deal about it. Should I even tell my wife? Oh my gosh. And you learn so much. So my suggestion would be to analyze those things to the nth degree and find out what mistakes did I make? What can I learn from that? How? And I guarantee you're going to find a lot of valuable stuff just going through that process. So.
Well, half the stuff we put out is the negative stuff, right, that people don't want to talk about. Because there's one thing I heard early on in the journey, your mess is your message, okay?
Yeah.
And I can tell you now we're going to sell the 29th home I lost money on in this business next week, okay? And I can tell you all about those 29, right? Now
You need to do it out of the month.
I should. The 29th one, though, was also the home that won me the Builder of the Year. And it was in a neighborhood where I sold this one for $250, and I'm selling my Builder of the Year for $260, and it should have been $300, $350. I don't know. It's just one of those things right now. But because it was the Builder of the Year, I also got 7 other sales and deals off of it. So is it on paper? Yes, but I'm not complaining. Okay.
Right.
But you know what the smart thing we did? I took it off market first, and then I sold it.
Nice.
So no one, some appraiser can't find anything later on to use against me. It's like, the names have been changed to protect the innocent, right? And I said, hey, I'll sell it to you for that price, but this is how we have to do it.
Yeah.
And they agreed to it. And my realtor knows, because she's really smart. She's like, okay, right? Because it just is what it is. You have to realize that. There's going to be mistakes. I don't worry about the mistake. I worry about keep making the mistake.
Yep.
And I think there's no perfect. And there's no perfect way to do anything in this business. And people get afraid of not being perfect. I mean, we're married. We're told every day we're not perfect. I always say that, because it's just, but it's life. And people see this social media thing, and I hear it all the time. Oh, you have it so easy. I'm like, what?
People say that to me too, and I go, you haven't seen all the things. Like, we started a brokerage. Tom McNamara and I started a brokerage.
320.
Right? It was for investors.
Yeah.
Realty 320. And, we got through that, and God, was it 2 or 3 years in? And just the compliance portion of that alone was just killing us. I don't like paperwork, right? And we weren't making enough money to hire somebody to do that, so it was falling basically on Tom or I, and I'm don't want to do it.
Right.
So
but realtors are like herding cats too.
Right.
Yeah.
A lot of them, I thought, and a lot of them we helped in the aspect that they wouldn't step out of their own and do a deal. But if we've partnered with them, right, and we did the deal, and they could ride on our heels and watch what we did, and then now they got the model, now they understand it, now they know what to do next time, so then they'd partner with us again maybe. And then that third one they do by themselves.
And then they should be
it
off
just,
to, yeah.
It gradually, so I think we helped a lot of people
You did.
through that.
I remember, because I was just coming into real estate, I remember 320. And I appreciate Tom McNamara, first of all.
Yeah, Tom is a great guy.
Yeah. He has a different approach to IRA investing. When I went to Joe one day, he's like, you were talking to Tom McNamara, haven't you? Because he has a good approach to it.
He has a great approach.
And, did I ever tell you that they treated me so well at Joe's office because they thought I was Tom McNamara.
Oh.
So I was this superstar 4 years ago, and Haley finally said, I only treated you that good in the beginning because I thought you were Tom, but then it's too late now, right? I expect this treatment. But think of all the people you've helped over there, though. Because I remember people who worked there, and some of them still never got out of their own way, but isn't that the norm, right?
Yeah, 80% are going to do nothing, and 20% are going to. It's the 80-20 rule.
And when I go and I teach this stuff, here's all the paperwork, here's the documents, this is how you do it. Like, why are you doing that? You think they're really going to do it? I hope they do.
Right. That's the goal.
Right.
Right.
I just went down to Miami last month, and someone who came up here to hear me speak at a lunch and learn I had last year, she's down there. So I had my assistant reach out, we set a meeting and everything, and I'm like, man, why didn't you just reach out? Because they're making all these mistakes. Because they went from investing in mobile home parks, not owning the parks, but like infield, to doing land home like I do. And they didn't ask for help. And I sat down there in an hour and a half, gave them all the information, and now they're asking for help, but they're also buying from us too.
Okay.
I don't care if you do that or not, but I had to teach them, why are you going to build a house, a project here? Oh, well, the land is cheap, but you got no sales.
Right.
I never heard of Venus, Florida, right? I'm like, I heard of Venice. Venice, great area. No, Venus. Venus? Well, it's south of Avon Park. There's nothing there.
Right.
So when I asked them, you know what the market absorption rate is? They're like, what's that? So I showed them active pending sold 3 miles for you. We went 10 miles. There were 2.
Ouch.
This isn't where you're going to play. And they were active, and they were 100+ days on market. This isn't where you build, because no one's going to buy there. No one wants to live there. That's why.
Yeah.
You know, and like, why are you helping us? What do you mean, why am I helping you? It's my job. I'm supposed to. Here's the path. Follow it.
Yep.
You need help, I'll give it to you. And they were just so surprised that I would still do that. What do you mean? Like, even I went to an investor meetup, and I'm like, guys who are trying to do what I do, I'm like, but you've called me for help before, but we're kind of doing it now too. I'm like, okay, you're doing 1 or 2 right now. I can help you. You wouldn't have made the mistakes.
Yeah.
You know? Like,
Yeah, there's some things I can help you with, and there's other things that there's no way. I mean,
I can't help you after the fact so much.
yeah. Oh, definitely not.
So
Definitely not.
we're getting ready to wrap up. I appreciate it. If you could give people one item, one nugget, what would it be?
Read a lot of books, watch a lot of podcasts. That was something that wasn't available, right, when I was first in the market and trying to understand the market. There's a lot of bad advice out there, but there's a ton of good advice too. Invest in your self-directed IRA, 401k, HSA, ESA. Make those a priority. You know, I always tell people, if I could only invest in one thing a year, it'd be my HSA. So have you invested in your HSA this year? If you haven't,
I haven't.
make that investment. Make sure you do it. Again, you've got till April of 2026 to make that 2025 before you file your taxes.
Right.
Right. So you got to do it before you file your taxes. But you know, make that happen. Make that your first investment, and you know, make mistakes. Go out and make some mistakes, because that's where you're going to learn.
Yeah.
And you know, kind of it's feeling your way along, learning and hiring that mentor as quick as you can find them. When the student's ready, the mentor will appear. So I obviously wasn't ready until I think I didn't get involved in masterminds and really looking for a mentor until maybe 2014, 15 timeframe. And that's really when I started to grow.
Right. Yeah, because it speeds up the growth cycle. You know Frank Hopkins. So years ago,
Love Frank.
Yeah, we never worked together because we would have killed each other, our personalities. But now it's different. And one thing I told him years ago, when I get to this point, I'm going to teach people here for free in the beginning, and I have, because I found that people who have a scarcity mindset in the beginning were sending me down the wrong path. And then I figured it out, right? And I circled back, and then I kind of went past them. You know?
Something else that comes to mind, Tom, so I've taught a lot of classes at CFRI, right? Just the night classes,
Yeah.
3-hour classes. And what I found is, in preparing to teach that class, I learned so much more, because I want to be ready to answer questions. And so it forces me to learn that subject matter at a deeper level. So if you really want to learn something,
Teach it.
force yourself into a situation where you're going to have to teach it to other people, and you're going to learn that subject matter so much better and understand it so much better and at such a deeper level. And so,
Well, that's
you
the
wanna
best
learn,
way to
go
retain
teach.
something, is to teach it.
Yeah.
Especially, the problem I found with teachers, though, they don't know how to actually do what they're teaching.
Correct.
And
I don't want to teach anything that I haven't done and have personal experience in.
But that's why I teach my business to people, and that's why I get better at it and better at it and better at it, because I have to talk about it all the time.
Yeah.
And I taught people for free. I get paid to teach it now. I fired half my students in March. I said, you know what, I'm going to take March off. I fired a lot of the paid ones. One, it wasn't a good use of my time.
Yeah.
And I look at it as, I don't want to just take your money. If you're not going to do what I'm asking you to do and you're paying me, then don't pay me. Let me just end it here. because I want them to be successful. But if they're not going to put in the work, it's not even the money is whatever. It's not I don't do it for that.
Yeah.
But if you're not going to put the work in, I don't want you to be here, right? So I fired half of them. I took on another free one who came to my event 2 weeks ago. Somebody robbed her and said for 10 grand that
See, I hate to hear that.
they could do they said my name and my company name, okay? This is a 62-year-old woman, faith-based though, who's an investor, and she got robbed of $10,000. Then she went to a Christian entrepreneur women's group, and she sat next to two people who know me, and they connected her with us.
Nice.
She drove from Cape Canaveral all the way to Polk City for one of our events. I did not have the time at the event to speak with her. She took off before I could get to her, but she was on my, it was just my event though. I called her that Saturday. I spent an hour on the phone with her. I listened to her cry about what happened, and I said, I got you covered, don't worry about it, right? Because we're in a position to do that. So don't worry about it. I'm going to get you financed. I'm going to take care of all that. Don't do anything more to the lot, and don't buy any more interlock in here.
Yeah.
We're going to talk. But you know what we agreed to do? I'm going to help her do more, and the charity she donates to by her, we're going to donate to that charity with her.
Oh, that's great.
That's what we're supposed to do, right?
Yep.
So everybody, you heard Greg Bond here today, who is an amazing investor, man of faith, entrepreneur, and I hate the jack of all trades, but you really are, you wear a lot of hats in this business well. And I thank you for your time today and your friendship, man.
Absolutely, Tom.
Take care, everybody.